Hello and welcome into commodity culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm thrilled to welcome Peter Grandich to the program. A veteran of the finance industry, the author of Confessions of a Wall Street Whiz Kid, and the founder of Peter Grandich and Company. For investors in the metals and mining space, today is a must-watch episode as Peter gives his take on gold and gold mining stocks, why he's turned from neutral to bullish on silver and his price targets for the metal, the opportunity waiting to be seized in uranium stocks, why copper is his favorite metal of them all, along with his thoughts on the global and US economy, and so much more. I hope you'll enjoy today's conversation with Peter Grandich. Peter Grandich, great to have you back on Commodity Culture. It has been a while since we chatted, so before we dive into the crux of the interview, I would like to ask you, what are the main themes and trends you're currently watching when it comes to financial markets and the global economy that you think more investors should be paying attention to right now?
So I think the fairest way to describe it to start off is that I am a chicken in a foxhole. And my attitude for our planning group here, we just can only work with U.S. clients, but is it's better to be a live chicken than a dead duck. There's too much happening on too many different fronts, politically, socially, economically. We've had a almost a 4-decade bull market in bonds that ended a few years ago. We think the same is coming true in terms of the general equities here in the U.S. And it's going to be more important, Jesse, for preservation of capital than capital appreciation. That doesn't mean that there aren't areas that you can make money in and try to double or triple your money. And obviously, one for me is the metals. But I think overall, no matter where you're at, but particularly for U.S. based investors or people investing in U.S. assets, I think bonds have clearly seen their best days already, and we're seeing the best days come to an end here in the U.S. general equity market.
Very interesting. Any thoughts on the recent price action when it comes to the U.S. Treasury market? There was some talk of turmoil in the bond market as 30-year rates rose to pretty high levels historically. Do you think that story is over and done with, or do you think we could see more distress when it comes to U.S. Treasuries?
First, I think it's very important, and we don't have habits for those of us who play equities in general, whether it is metal stocks and all, to recognize how much bigger and more important the U.S. bond market is to the U.S. stock market. It's very rare that the U.S. bond market moves based on something that happened in the stock market, but it's much more common for the stock market to move based on what's happening in the bond market, meaning that if interest rates are declining and bond prices are going up, that's usually favorable for the stock market and gives it an underpinning, and vice versa. So I think the first thing we should do is pay more attention to what's happening, including myself, what's happening in the bond market, but not just here abroad. In Japan, they have even a more serious problem at the moment than we do. Our perception is better. We have as much problems overall, I think, when you look under the rug, but their perception is a lot worse because of how low and artificially their interest rates were kept for a lot of years and how dependent self-financing has become in Japan, where basically the Bank of Japan has been the main financier of its own debt. But I think what's important to understand is that we have a lot of debt coming due. First of all, we have 9 trillion coming on the Treasury side, and then we have a bunch of corporate and of course consumers getting more indebted at a time when things are minimally in the U.S. slowing down. There'll be an argument, and we won't know who won the argument 6 to 12 months from now, but there's an argument now that if we haven't slipped into recession, we're on the verge of. We're continuing, as you and I speak, continuing seeing things slow down in all areas. Home sales, car sales. A lot of it has to do with the tariff. And as you and I speak, there's like another log thrown on the fire. And who knows by the time you air this, how many more logs. But the fact that what's important is, since there's no clear remedy on the tariffs, businesses can only do one thing. They have to sit on their hands, Jesse. I have a lot of small business owners as clients, and they're perplexed what to do. It's almost every day. And the best choice is to do nothing till you get a clearer picture. So I think to answer your question is the bond market is far more important than the stock market. And if I'm a betting man, I'm betting on interest rates going up, not down, not only here, but also in Japan.
And now a quick break to hear from our sponsor, ARC Silver Gold. Osmium owner Ian Everard is considered one of the most honest and level-headed gold and silver dealers in the United States, praised even by his competitors. So give him a call today to take advantage of the specials right now. Silver Kangaroos 2023 1-ounce coins, mint fresh, only $2.47 over spot. Mint fresh silver maple leafs 2025 coins, 1 ounce, $2.87 over spot. While supplies last. Reach out today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And now, back to the interview. And from the signs you're seeing in the economy there, the U.S., obviously, as you mentioned, consumer debt also rising quite a bit. You've talked in the past about a retirement crisis. Do you think the middle class in America is already in a recession?
Well, what's left of them, they are getting squeezed from all ends, Jesse. We just saw an interesting statistic. I thought it was one of the most enlightening number that I did not know to the actual fact that the Secretary Treasurer gave out 2 months ago. And he noted that the 10% wealthiest Americans own 86% of all the assets in America. And the next 40% own just the 14% that's left, and half of America doesn't own assets. So the middle class falls somewhere in the no or just a small part of it. So I think they're being hit from all sides. And, you know, what's lost in this, when I hear people talking on our financial networks here in the States, they're always talking about, hey, what is IBM doing, or what is some high technology company doing? But the backbone to America's economy is the small to mid-sized business owner. And they'll tell you, Jesse, almost to a person, that in the last 20 to 30 years, not just now or the last administration, there has not been good legislation towards the small to mid-sized business owner. And with everything else that's happening, that's another reason why I don't have a bullish outlook, because economically, the backbone to America is just getting to the point where many of them just want to get off pulling the gravy train and try to get in the wagon, which is the gravy train.
So let's talk about the commodities sector at present and the potential opportunities there. I want to start with gold because it's leading the pack when it comes to the commodities complex. The macro setup obviously seems incredible. The tailwinds driving the gold market don't appear to be slowing down anytime soon. The price action we've seen has been tremendous. What are your thoughts when you look at the gold sector? Do you think we're still in the early stages of this bull market? Are we somewhere in the middle, or could we be reaching the latter end?
I would say we're clearly past the first or second inning, because I can remember not too long ago buying it at 1,400 with a vision of if it got to 2,000 or maybe 2,500, we'd be thrilled. I don't think any of us, even the most dire forecasters at the time, imagined a 3,300 price getting to where we have, and holding pretty well as well. I do think the consolidation now that is happening in it is very healthy if you believe in higher prices. In fact, the longer this would trade sideways between, say, 3,000 and 35, the more likelihood we can even eventually reach much higher prices. Everything that was constructive for it remains, and yet we still see little or no ownership by so-called mainstream Wall Street or mainstream media and all. And I really think until you start hearing it from getting in cabs and getting your hair cut and everything, we're not anywhere near other than past the first couple innings. We haven't even gotten midway to this. I still think there's multiple years left in this, and 1,000 or 2,000 more possible to the upside. And keep this in mind. If you're in the other area of mining shares, most producers you would talk to say they'd be glad to take 3,300 for the next 10 years because their cost is so much lower and not likely to go up a lot. So there's also an importance to, other than the physical ownership, those who end up looking for it and develop it how well are they doing with the current price? And I think they're all, we see it, Jesse, the top 10 to 20 major gold producers, almost all of them are producing record free cash flow. And they love that. And you clean up balance sheets real fast, and you also can start to make acquisitions from strength. And that way you could be, choosy on what you're doing. So all in all, I think the gold market still has a long way to go.
Yeah, let's talk about the gold mining sector. We have started to see miners wake up to some extent. The GDX ETF is up around 45% year to date. Some are still saying even the big producers are very cheap at these prices. Do you think gold miners in general are presenting an opportunity, or would you be more selective in perhaps looking further down the chain at perhaps developers or even explorers, if your opinion is that the big producers maybe have been overbought at this point? What's your assessment there?
They may be overbought from time to time technically, but I don't think they've come close to their highs. Like I said, I suspect from several quarters they are going to print record free cash flow. And I think what will happen, Jesse, is as the general equity market slows, and I'm not in the camp that thinks there's going to be a big crash in the stock market, but I also don't think it's going up a lot. Wall Street will always find reasons to buy something. It doesn't know how to do nothing. And what will happen is the generalists out there will start to see that the only real sector that's pushing out these record quarterly reports are these gold producers. And we're starting to see that now. We're starting to see some of the main brokerage firms and main people, big hedge funds buying interest in gold companies, talking about gold stocks. We've even seen it in uranium with Goldman Sachs getting involved. So I don't think the major producers have reached a peak. Where I have decided to focus, because I played the actual physical bullion first, I played the majors, and I several months ago and in the last few months put as much as I possibly could without getting a divorce into the junior resource sector. And even there, we're seeing now a lifting. So it's all systems go at this point. Yeah, they may get points where there's some consolidation and profit taking, but I think that market it's probably in an earlier stage than even the physical gold price.
Let's switch over to Fort Knox. A lot of controversy surrounding the potential reserves or lack thereof. I want to get your thoughts on this tweet from Craig Hemke. He said, a sitting U.S. Senator gave the current Secretary of the Treasury 30 days to arrange a visit for inspection of the U.S. gold reserves at Fort Knox. That was over 100 days ago. Still no response from the Secretary of the Treasury and still no visit or audit of Fort Knox. What are they hiding? This is a very good point. There was a lot made up about it. Elon Musk was sounding off on it, Ron Paul, and yet it's crickets at this point. Do you think the stated gold reserves are actually there? And if so, why all the secrecy and apparent refusal to audit or even give any insight into the gold reserves in Fort Knox?
I actually think it's not all there. And if it is, it's been lent out kind of like the movie, the producers, more than one time. I think one of the things that I think we were going to see in what was early in the Trump administration was to see a repricing on gold to get it revalued, to give them some room on the treasury, and also to eventually introduce gold-backed bonds. I think that's one of the things they're going to have to do. I think the problem is when Trump talked about it, let's go there like almost on the next plane and see what's there. And somebody said, Mr. President, it may not all be there. And then they just totally stopped talking about it. And the argument that I give in support of Ron Paul is this: if it's all there, just show everybody. What do you got to worry about? You can end all the conspiracy books, everything. Let them come with testers, make sure it's not tungsten or what everybody else claims and all, and be done with. The very fact that they don't allows that conspiracy stuff to fester. And when you think about how they thought about it just a couple months ago and they pulled back, maybe there's something serious to it. Like I said, I think the other fear that they had was, without knowing first, maybe they didn't even know themselves, is somebody said, well, you remember what happened when Geraldo Rivera decided to open up that old Jimmy Hoffa safe, thinking, wow, everybody's going to see something, and nothing was there. Could you imagine doing a live broadcast and realizing the gold isn't at Fort Knox? The whole world would cave. It'd be the worst market crisis we've ever seen in our lives. So I think there's some realization, and I appreciate Ron Paul saying that. And, his father said it for as long as I've been in the business. And nobody ever went to do and get it done and just say, yeah, a couple of guys said, yeah, we saw one stack. No, take us through the whole place and let us reach wherever we want to reach and test. Then you don't have any problems.
Yeah, and that Geraldo Riviera, so one of the most disappointing moments in the history of television, I believe. This whole build up, and it's an empty room. Let's talk about silver for a moment, a metal that in the past you've equated with kissing your sister. I know you've recently become quite bullish, so walk us through what you're seeing that caused you to pivot when it comes to silver.
Yeah, and rightfully so. It did underperform for a long period of time. And then silver bugs, especially back in the older days when I spoke at the conferences, hated it when I said it was like kissing your sisters. Not that I said not to own it, but I always put gold ahead of silver. However, several weeks ago when it broke under 30, uh, I looked the way it was trading. I bought into the manipulation to the level that minimally there's people selling it hard at that level. It could be just because you keep selling it at a certain level until it finally breaks, or there's something more to the argument that it's been manipulated. There's not all the silver out there, et cetera, et cetera, et cetera. But also the ratio became important to look at. You know, it is historic, doesn't mean it's supposed to be always at a place, but historically, when something traded at one level and now it's so on the other side of it, basically 100 to 1, it also brought interest. And my feeling was as this bull market in metals matures and retail becomes more involved, they tend to move to more silver than they do gold because it's more price sensitive and all. So all in all, it's a bullish factor, and it is trading as you and I speak extremely well. I think now it's a matter of days to no more a few weeks till we take out this resistance in the 34 and 35, and then that'll bring in general non-normal players, momentum players, etc. And that itself will create news, and that'll get the momentum going. And also, I think we're on that verge. It's not something I've ever said before. I haven't been a silver bull for decades almost, but I do think it's appropriate now.
Let's talk about the broad market here. You mentioned that you're not one of the proponents of this big crash. We're going to have a huge crash, a 2008 sort of moment. But how do you look at the health of the broad market, and what is your forecast up ahead? Because obviously we saw all the indices, the Dow Jones, the NASDAQ, and the S&P take a very big hit in the Liberation Day tariff announcement fiasco, but currently staging a strong recovery. It appears, at least for a moment, that the tariffs were not the spark that leads to a real bear market. Do you think people are being too complacent right now? Has the buy the dip mentality become too pervasive? And what do you see up ahead for the broad market?
So there's a long-winded answer, but I think it'll go a long way to do justice to your question. And I'll start with, first of all, almost half of all financial advisors in the United States right now weren't even born when I started 41 years ago. The bulk of them have been only since the millennium started. And the reason I bring that out is, other than one or two short but significant declines, it's been a one-way street if you've been a financial advisor. So you can understand their buy the dip mentality, because so far each time it's worked. And it's in the same mode that it is now. You buy dips like what's occurred there. So it's going to take more than one dip before that breaks the camel's back in their eyes. But I think what's real important, Jesse, and doesn't get discussed at all, and I hope you don't mind me taking the time to, because I think it's extremely important. Those of us with gray hair or no hair, meaning that we've been in this game for decades, the market that we were once involved in doesn't really exist anymore. In 1984, when I started, almost 90% of the trading was just retail investors. And those were people that were just buying stocks to be part owners or selling up businesses. And only 10% or so was institutional. And there was no computer trading of any type whatsoever. Now, over half the money that's in equities is in passive funds. And these are funds that are tracking indexes and indices where the manager, he or she, only has discretion to purchase certain stocks that make up those indices and keep tracking whatever that index or indice is performing. It's not any room for individual, well, I won't buy as much of this or sell this. And that has, in a sense, self-fulfilling prophecies. As more money kept coming into these funds, The manager couldn't even say, no, let me hold some in cash. No, they had to put it to work. And a lot of it was concentrated in the higher echelon technology in the S&P 500, which happens to be the biggest index that is used in these passive funds. The issue with that is one day the reverse will happen. And the manager's not going to be able to go, no, I don't want to sell these stocks. They're too good. They're going to have no choice. That's very, very important to understand. And then think about where the other half of the money is. I would argue 2/3 of that remaining half is in computer algorithm trading programs. Some as simple as trading based on words used in headlines to trigger programs, to some very sophisticated that will use all sorts of delta spreads and options and futures and simultaneously selling. Those old Grandich guys with no hair or gray hair, they make up a smallish part now, retail, that is still buying stocks for part ownerships of businesses. So I think the first thing most people have to do now is get out of that mentality from 30 or 40 years ago and understand the game and what the board exists now. For instance, in our financial shows networks here, Jesse, they're being shot from the New York Stock Exchange. That might as well be a museum because so little of the trading actually takes place there anymore. And so I think we have to understand how different the game has changed and what influences it. And therefore, to answer your question about, will the stock market ever go down or whatever, I think we have to look at a couple things. One, go back to what the Secretary Treasurer said, who owns the assets? The top 10% of wealthiest people own most of the assets. That means they also own most of what makes up the stock market. What's interesting of late in these last several months, going into the latter part of last year, it shows the very, very wealthy are been selling U.S. assets and parking them elsewhere. I think that's interesting. The second thing I think that's important going back to is that what I said earlier, most financial advisors really are one-way street drivers. So far, that's worked for them. Someday, for some reason, it won't work anymore, just like it stopped working in the bond market. If and when that day comes, the lack of experience to know suddenly how to drive on a two-way street or your first time that you're approaching a traffic circle or a roundabout, that's probably going to cause more downside pressure than otherwise. So like I say, when I combine that all with my other economic, political, and social aspects on how I look at the markets, I think the U.S. stock market especially is fully priced and no reason that I feel I have to chase it.
When it comes to Trump's tariff policies, which he seems to kind of put on and off again, and also threatening them on social media, a lot of people are calling that the art of the deal. He's just putting these threats out there to kind of scare the people he wants to influence into compliance. What are your thoughts on that whole strategy? And do you think that ultimately he'll be able to accomplish his stated end goal, which is basically bringing production back to America, relying less on foreign nations for things they need? That there's been some very positive developments, like the executive order for critical minerals to kind of give a boost to the mining sector, fast track projects. I think that makes a lot of sense. The tariff policy, on the other hand, has a lot of people sitting on the fence. I talked to some people who believe it's the art of the deal. He knows exactly what he's doing, all the way to this guy's incompetent. The people around him are incompetent and it's a disaster. Where do you stand?
Well, I would probably argue that if we were able to look at those people that you referred to, those who said it's the art of the deal and he knows what he's doing probably wear MAGA hats. And those who say he has no idea, he's a lost cause or whatever, are suffering from the Trump syndrome. I know that because I'm neither. I'm in the middle. And I get it from both of them why I should be much more their way than I currently am. This is how I describe it, and I just described it to our clients. And I'll say it to you, and that is, on some aspects, I think he's done a great job. I think he fixed an immigration problem that if it would have existed for a few more years, America would be in a far worse shape than it currently is. I think what he recently did in the Middle East is very encouraging. An area where peace has been hard to find, it seems to me that is a better possibility now than it's been since I've been an adult. Where I've totally disagreed from day one, and my record would show it, is I've been a big believer that the world was moving away from the dollar and the US long before it came the topic of the day. 3 years ago, I embraced the BRICS argument, and that's what helped lead me to be so bullish on gold. I believe that's not only going to continue, but I believe what Trump has done has actually made it better for that to happen, not worse over time. I think he made the mistake of taking a bully attitude with a big stick versus walking with an olive branch and trying to express that, okay, listen, maybe we haven't done everything right, but is there a way that we could work this out for the benefit of both of us? So I guess I would not be in it. No, I'll say it this way. This is the way that he negotiates. They're right that it is. I just don't think it's going to work in this case. And as you and I speak with this court ruling now of tariffs, which could be overturned and all that, the only thing it's going to do for the opposing team, if you're any other country, whoa, even if we were hurrying, which I don't think, remember now, if you watch what he was saying a couple of weeks before so-called Liberation Day, his expectation was in a matter of hours and no more days, once I do this, everybody's going to beat a path and we're all going to be live happily ever after. That didn't happen. And as slow as some countries have been, this is even going to slow them down more. Now, what they're smart enough not to do, Jesse, is you cannot beat that man in a word-to-word battle. It doesn't matter what you say to him. He stays focused on what he has to say, and he just says it. They need to do things behind the scenes, which I think they are. We saw China and Japan go in a room together with South Korea to discuss a new trade pact. We watched China and the Europeans talk about getting rid of their tariffs and try to work closer. So I think the long answer is this will come back to bite him how he took it. And at the end of the day, 6, 12 months or 2 years later, it will have caused more harm than it did good, in my opinion.
I love that assessment. Very, yeah, and I agree that you'll see it in the comments as well very often. If anything negative is said about Trump, you have people accusing you of having Trump derangement syndrome, even if it's a very mild criticism. And then on the other hand, if you're praising Trump, you'll have people who are telling you watch too much Fox News and you're brainwashed. You can't win. But being in the middle, I think, is generally the right place to be. I want to talk about uranium because recently you've been bullish on the sector once again after seeing just the bottom of the basement sentiment. Obviously, a lot of the equities taken out behind the woodshed and slaughtered. We saw a really big jump, however, once the Trump administration announced their commitment to supporting nuclear energy. Many of the equities doubled, double-digit percentage gains in a single trading day. Obviously, very volatile sector, not for those with a weak stomach. I believe today we're experiencing losses across the board, which I guess makes sense after you get that big of a gain. Do you think now is a good time to enter the sector? And what's your assessment of uranium overall right now?
So I got involved. I never played it, even as a money manager, but in 2018, 19, sometime in that period, under $20, I heard someone speak about it, could not believe it was that low, looked into it, just seen the start of the electrification argument and things of that nature, got involved in a big way, rode it up to above $100, and then had mining and exploration companies and things related to uranium were all up triple digits, some as much as 500%. And I said, folks, let's just take our profits. Not that the story's gone bad, but these things have gone too far, too fast. And it was just, I would say literally every 5 minutes getting either an email or seeing on Twitter somebody with a rocket ship and uranium. And I just said, there's too much bullishness. Now it basically, as you said, almost did a 180 from sentiment wise, to the point where just back in March, I literally saw people who were once sky high saying, that's it, we were wrong, we're throwing in the towel. And I have to tell you this, Jesse, and I know you've watched uranium. The story didn't change. The only thing that changed was the sentiment. Actually, the story got better because some of the things that a couple of years ago that people used against the uranium argument, like solar or wind is blown up, so to speak, pun. That's not viable to a lot of people at all. And more people were talking nuclear and the shares that came back. So what I did was I said, listen, we already made, this is again talking to clients of our planning group. We did well. Here are, I think, 7 of the best ways to play it. If they come to such and such prices, I would go long. If they don't, all right, we already did well. Well, 5 of the 7 did. And the big day was basically between April 4th and April 7th. That was the washout, bottom, get me out. I don't want any of these things anymore. And since then, they moved up. Now, what I just did the day before is they moved up 56% on average, these 7 stocks, in less than 8 weeks. So I just said, hold, put it on hold. Put stops substantially below because we don't want to give up all this gain. I don't think that's going to happen, but that's how you should protect yourself. So I wouldn't run in today because they moved so much, but they definitely are things you want to look at if there's any decent pullback in them now. That argument for uranium has never been better. It's at probably the best argument since the day I first looked at it 5 years ago. But the shares had a great run. You don't like to chase it. And then what you can say, if you're very long-term oriented, you buy some now and you save some in reserve if it does pull back. And if it doesn't pull back and it goes straight up, I've never seen people starve with a half a loaf of bread. So I think you buy a little if you're conservative, hold a little purchasing. But I do think in general they'll be substantially higher. I think it has to get back above $100 the price, even though that price is not as critical as we can get long-winded and discuss what really moves uranium. So what I suggest to people is this, if you don't mind. I believe there's a bellwether. You know, it's very unique, Jesse. In every other metal, there's dozens, if not hundreds, of major producers of that metal. But in uranium, there's only a handful, especially public. Cameco, whether you like it or not, needs to be your bellwether. And listening to what they're saying and how they're seeing the market is a good eye to the market. And so not only is it a bellwether stock to me, but I would listen to them, and they seem that slow but steady rise, and that more and more utilities are going to have to come to bear and step up and buy uranium in order to fulfill the needs. With, by the way, a wonderful report written by this Tavi Coster about the real situation of electrification here in the United States. That not only, as I like to joke, that some of it was installed by Thomas Edison, that's how bad it is and how structurally deficient it is, but how much more is going to have to be built in it and metals to do it in order to meet all the demands of AI and other things. So all in all, the uranium argument is bullish. Stocks maybe got a little ahead of themselves here, but 6 to 12 months later, it and those stocks should be higher, not lower, in my opinion, anyway.
Yeah, and great comment about Cameco and paying attention to what they're saying, because they also acquired Westinghouse. They're involved in the fabrication of nuclear fuel as well as the mining of uranium. So they have a pretty good handle on the entire chain, from mining to conversion and enrichment. So when they do their quarterly calls, they give a lot of really interesting information and tidbits about the sector that people can pick up on. The last commodity I want to talk about is copper. I know this is something you've been pretty much consistently bullish on since we started doing interviews. What are your thoughts on the setup currently for copper and the copper mining equities today?
So at the beginning of the year was my favorite metal. My forecast, if you want to call it that, was 4 to 4.5 in the first half and 4.5 to 5 in the second half. And it's surpassed that. It's gone higher than even I imagined at this time. I think part of that reason is because the fundamental argument is still so strong for it. And it's a slow but steady working its way higher. There's no question that we are going to be in a deficit. Some expect as early as next year. We're still not seeing real hard money going into new discoveries and new growth. And those projects that are still out there in the world, grade is shrinking, more cost to bring it out. And listen, majors are not about to spend billions of dollars now in the same way they did 20 or 30 years ago, because of all the social and political issues that are arising in different parts of the world, especially where copper used to be one of the metals that you would eagerly go to those places to find and develop. So it has a very, very bullish stance. I just think it's going to work its way higher and eventually get and stay above 5. And some argue that we'll need to get above 5 and stay there for a while before any real serious money gets put into looking for massive new supply. And by then, the supply and demand scenario will be so bullish, it'll be a self-fulfilling prophecy in order to have that high price. But I think for now, it's just trading really well. And what's interesting is Even big gold producers who used to just talk gold, only gold, they're now got very much into copper. And one of the reasons also is that these gold copper deposits, one company that I own, it's almost split 50-50, and it allows you to develop the copper at a much lower capex cost because of how high the gold price is. So copper combined with gold and copper on its own, to me, is still a very, very worthy place to look.
Peter, where can people go online if they want to hear more from you? I know you got a YouTube channel, your X account, blog. Give us the rundown on those and where people can find it.
Well, the most place is, and the easiest to communicate. When I think about when I used to produce a newsletter, how long it took, almost a week from the time you wrote it, print it, fold it, mail it. The X page is the single best thing. You sit at your keyboard, and in a matter of seconds, the world can know what you're thinking. So my X page is where the best place is. I also have a YouTube channel with great people like you who not only interview me, but I get to interview. I place those interviews there. And of course, there's still a blog and a website, and that has a lot to do with the planning group that I'm involved with, and that's just for U.S. residents.
Great. I'll put a link to all of that in the description below. Always a great time chatting with you, Peter. Thank you so much for coming on.
Thank you, and God bless you, my friend.
And thank you for joining us today. This episode is sponsored by ARC, Silver, Gold, Osmium. Take advantage of their specials right now. Silver Kangaroos 2023 1-ounce silver coins, only $2.47 over spot. Silver Maple Leafs 2025 coins, only $2.87 over spot. While supplies last. Reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.